Well, let's get across the market open. Henry Jennings joining us in markets today. Henry, welcome to Wednesday. Let's start what we saw on global markets overnight. Of course, we had very steep falls yesterday locally, also seeing global markets slide as well. What is actually worrying investors at the moment?
Where do I start, Andrew? Good morning. There's clearly a lot of things worrying investors. It has been the same worries that we've seen for some time in terms of valuations, in terms of the AI boom, whether we're going to see the return on investment. Of course, we've had the results from the hyperscalers, and we did see, they are certainly making money out of AI. But of course, Nvidia is the big number that's coming out tonight. And I guess to some extent, it's not really about the number. It's not even about the guidance. It's about how the market actually reacts to the number. Nvidia is well and truly off its high, some 10 to 15% off its all-time high. So it has already baked in a certain amount of negativity, but you do have to question, and I wrote this morning, what Nvidia has to do to be the catalyst for the tech sector, and thus by sort of extension the US market to pick itself up off the mat and push higher. And I guess, if the numbers are fantastic and, beat all expectations and they're great and guidance is so fantastic that you can't ignore it, the question will then be, are the hyperscalers spending too much? Because this is coming from the customer's side of things. And if they're a bit disappointing, then obviously there's a question mark about valuation and ongoing valuations for Nvidia, which is the world's biggest company and has such a massive bearing on the US market. So you get the feeling that it can't win either way. The only good thing is, as I say, that it has fallen going into this result, and we haven't seen it, trading an all-time high and expectations so huge that it can only disappoint. But you have to think, the path of least resistance is probably further downside at the moment, as that the AI bubble question marks continue. And even last night, we saw another one of those round robin events with Anthropic, part of that, and OpenAI and Microsoft. These round robin events, while they push the valuations up, and they certainly push the valuation of Anthropic up quite considerably, is that just funny money? Is that just play money? So there's certainly lots of worries out there, Andrew, I think, at the moment. And, the market is probably ripe for further consolidation or even more of a pullback as we try and find our feet going into the Federal Reserve meeting in December, which now looks as if it's a bit of a coin toss.
Well, certainly got a bit of that pullback yesterday locally, didn't we, Henry? Down
Yeah.
around 2%. I mean, that certainly surprised many. Second worst day this year.
Yeah.
So what is bugging local investors now? Of course, in terms of tech valuations, doesn't really play out here, does it? Given there aren't too many companies to speak of in that space. More broadly, what are you seeing?
Well, I guess, there's a certain amount of deleveraging, there's a certain amount of locking in some of the profits. Yesterday we saw our tech sector, for want of a better word, being sold off quite dramatically. Technology One set the scene, really. 17% fall in Technology One on the back of their results, which weren't that bad. They came in pretty much in line. There was a little bit of concern about some of the parts of the numbers. There was certainly some concern as well about guidance going forward. And there was a special dividend. Usually you get rewarded with a special dividend, but not yesterday. The market was in no mood to reward anybody. 17% was big. We've seen Xero and WiseTech under the hammer for some time. So certainly, we are seeing these high PE stocks in Australia and elsewhere in the world come under significant pressure, and that de-rating continue. Now, I note this morning we've got an awful lot of brokers that are upgrading T&E, Technology One, which will please Rudy, no doubt. And we'll see whether that has any effect. But certainly, we saw BHP yesterday, down 3.5%. Copper was easier last night as well on the back of Freeport-McMoRan and the news from Grasberg that they may be reopening sooner than some of the market was anticipating. So copper stocks may be under a bit of pressure today. But there were certainly some illogical moves in the Aussie market yesterday, but there always are when there's a bit of panic in the air. Those RBA minutes really didn't help the situation, of course, with no rate cuts looking like as if they're not on the cards till the second half of 2026. But having said that, it only takes one bad jobs number and the RBA will be panicking and looking at cutting rates again. So, data driven is the name of the game, but certainly there was a sniff of panic in the air yesterday, which accelerated after the RBA, and certainly wasn't helped by US futures weakness. So we'll see if we can steady today, but it may be just a dead cat bounce in the big scheme of things as we head into the Christmas period.
All right, now, of course, in the meantime, we are getting some updates to corporate wise, also in the midst of AGMs. Anything that you've seen this morning?
We've got some numbers out from KMD, Kathmandu, flagging a solid start to FY26. I'm not sure anyone's really looking too hard at that. We have had the Webjet numbers out, which have been somewhat overshadowed by the fact that Hello World has lobbed a 90-cent non-binding indicative offer, as they're called, an NBIO, into the mix. That's 90 cents in cash. Not huge upside given they're already trading at 77 cents. So, there's not going to be a big, massive jump there. They probably should be trading at around, maybe 84 cents on the back of that. We do get some jobs, not jobs number, but the wage price growth numbers this morning for the third quarter. NAB's expecting 0.8% quarter on quarter. We've got TPG coming back on after their $300 million capital raise. So that'll be interesting. That was only done at a 5% discount, $3.61. So it'll be interesting to see how that reacts, given the turmoil that we've seen in the meantime, and also that news yesterday on that tragic TPG issue with Samsung phones. So there are a few things around and about today, but it's not a huge day for AGMs. But Kathmandu, one of those, I guess, will point to some trends in retail, but not huge. Rip Curl sales up, but Obels, which is in the US, fell 1.3%. So Kathmandu also doing well. Standout performance, 13.9% lift. So that was good. So there are some signs of life in the retail sector, but I think it's going to be a day today of licking wounds and fingers burnt, putting plasters and maybe some butter on those burnt fingers.